This is the reality. Let's take a look. Balaji, I don't know if I'm pronouncing that right. Balaji here on Twitter. First, the Fed printed trillions. Then they denied that inflation was happening. Then they said it was transitory. Suddenly, they sent rates to the moon. That crashed much of the economy. And now we have debris starting to fall this year. Banks, real estate, blue states. Then pressure to print will resume. That's the trillion-dollar question, is when is the Fed going to pivot and turn those money printers back on? Now, we have a timeline of events here from the Kobesi letter. This is in regards to the Silicon Valley Bank that is now collapsed and has been seized by the bank regulators here in the United States. So first off, we have SVB begins to face run on bank as 91 billion in bonds face interest rate risk. So we have a fire sale of 21 billion bond portfolio is announced. Over 1.8 billion is lost during that fire sale. SVB announces 2.3 billion share sale to cover bond losses. Then the credit agencies cut SVB's credit ratings. SVB fails to raise capital as investors panic. Then we see U.S. banking sector lose nearly 100 billion in market cap in 24 hours. SVB announces intention to sell the company. Regulators and FDIC take control of the SVB. And we have the second largest bank collapse in U.S. history seemingly happens overnight. I feel like I've heard that phrase before in the XRP community, haven't we? Talking about overnight reset. Now, I think we have to understand this doesn't, mean that everything gets collapsed and reset in one night. I think that we have to look at this in just a, metaphorically speaking, happening in the blink of an eye, right? I mean, while we still have Joe Biden telling us that it's all fine and it's all according to plan, but we currently have 93% of all deposits at SVB are above the $250,000 FDIC insurance limit. This can't end well. U.S. stocks and crypto have now lost over $2 trillion in market cap in under 24 hours. Stock market futures just hit a 2-month low, and Bitcoin broke below 20K. Meanwhile, a collapse of Silicon Valley Bank would mark the second largest bank failure in history. We look at the banks and the financial stocks right here from Bond Crypt, and you can see this chart. I mean, just a bloodbath of red in the banks and the financials, stocks tanking. Okay, let's keep it rolling. Don't worry though, folks. Do not worry. Janet, no telling Yellen, is on the job. Says that the Treasury Department is carefully watching the crisis at a few banks, quote unquote, a few banks, and need not to be worried. President Joe Biden says his economic plan is working. All right, folks. So no reason to panic, no reason for concern, right? It's going just according to plan. Now, I found a clip here from Meet Kevin. We're going to play this. And before I do that, I want to show you this. Jim Cramer telling us all is well. JP Morgan is a fortress. Okay. So we have the Jim Cramer inverse signal sending us the message here today, this morning. JP Morgan is a fortress. Let's see how well he's predicted in the most recent bank runs that we had, 07, 08. Let's see what Jim Cramer had to say. This clip here from Meet Kevin, huge shout out.
There's a reason why Silicon Valley Bank dropped 45% in one day, and even though the stock is suspended right now, is likely to end today down another 50%. This is despite the fact that people like Jim Cramer told us everything is fine at Silicon Valley Bank.
This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB, it's the old Silicon Valley Bank, recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation.
Yes, that was Jim Cramer literally talking about this bank that's now trading for under $100 a share, back when it was $300, saying Wall Street is wrong to think that this bank is in distress. Yet now the bond market is starting to price in that this bank could go bankrupt. Then again, Jim Cramer's track record isn't that great. Here he is talking about Bear Stearns back before the company went bankrupt. Look at what it was trading for when Jim Cramer was pitching it.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the fifth biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities, and as you are well aware, that price is pretty much zero, and that's why you're seeing pain across the street.
It's also despite the fact that JP Morgan said everything is fine at Silicon Valley Bank. In fact, we think it's going to go to the moon, and it's going to be worth $375.
Yeah. And you guys see there, Jim Cramer. And you know, as you said here, JP Morgan, they're the ones that actually stepped up and bailed out Bear Stearns there at $2 a share is what she said, right? So you have Jim Cramer acknowledging here once again that JP Morgan is the fortress. We'll see what happens. Of course, Jim Cramer, every time, I mean, whatever he says is going up. Don't worry, don't panic, don't move your money. That's just crazy, you heard him saying. Well, obviously there was some reason to concern here. Now, we see this is not just smaller banks, guys. This contagion is spreading rapidly throughout the banking sector, and it is not just these smaller one-off banks. Take a look at this one, guys. So this one shared here by ProCoin News. Last month it was BOA. This month it's Wells Fargo's. Sure does feel like the system is getting ready to flip the switch, doesn't it? And so Wells Fargo customers' direct deposits are missing, according to reports from the insider paper. Okay. Customers have reported that their direct deposits were missing from their accounts on Friday. So this is spreading rapidly, not just smaller Silvergate, not just smaller little, and this is not just right in the crypto space now. The crypto space has spread to the banks. Now the banks have started to fall. And this is what I'm worried about, is they're going to be able to look back on this and say the first dominoes to fall came from the cryptocurrency space. And that's a big reason for concern. Now, Peter Schiff breaking this down, he says, the U.S. banking system is on the verge of a much bigger collapse than 2008. Banks own long-term paper at extremely low interest rates. They can't compete with short-term treasuries. Mass withdrawals from depositors seeking higher yields will result in a wave of bank failures. Now, I just want to remind everyone, right? We played the FDIC meeting that took place back in November of last year, where they were talking about the systemic risk throughout the whole space, and basically that the events of 2020 showed them, you know, what was kind of a trial or a simulation for what would be coming in the future. They didn't know what was going to cause it. And now here we go, a few months later, sure enough, perfectly played. We get to blame the crypto bros for the start of the liquidity crisis growing. And it's so funny because I've had so many people in the comments arguing with me that we're not in a liquidity crisis, right? That there's no reason to worry. And you guys have seen the crypto bros who are shilling you the to the moon story, saying that the bottom is in. It's all up from here. Now that we've reached 25K, it shows that the space is resilient and we're just going to keep on going up. The complete opposite is occurring. Have we set a new bottom yet? No, not yet. But right, we're just starting to see this ramp up. This has been the most recent tank of gas that's been dumped on the fire that's been going on, that we've been warning about, and it's now spreading rapidly. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.